I said that kind of June 15th of this year was the end of crypto winter. So we have this seasonal period in crypto, follows a 4-year cycle. But the problem is the difference between price and value. So the value of the Bitcoin network can actually be calculated pretty accurately using Metcalfe's law, looking at the number of users and the participants in the network, looking at transaction sizes and volumes. And so we can actually come up with a pretty good method of calculating fair value. The problem is the price of any asset doesn't necessarily reflect fair value all the time.
American investor and fund hedge manager Mark Yusko is the founder, chief investment officer, and managing director of Morgan Creek Capital Management. The investment firm caters to the investment needs of pension funds, endowments, and wealthy individuals. With decades of experience in the financial world, Yusko has built a solid reputation for himself. The hedge fund veteran is convinced about the potential of the world's leading cryptocurrency, despite the ongoing crypto market bloodbath. Many of his interviews and tweets reflect just how much he believes in Bitcoin, especially over traditional assets such as bonds and equities. In a recent interview, Yusko discusses his assessment of the current state of the cryptocurrency market. Since November 6, when Binance announced it was selling the remainder of its FTT tokens, the crypto market has been caught in a whirlpool of high volatility, record lows, and high level of uncertainty. The latest round of the tumult started with rumors that cryptocurrency lending company Genesis was about to go bankrupt. Last Wednesday, the firm announced it was temporarily suspending withdrawals due to the unprecedented market turmoil caused by the FTX collapse. Though the lending firm has denied rumors of its imminent bankruptcy, that didn't stop a sharp drop in crypto asset prices. On Monday, the overall cryptocurrency market cap dropped below $800 billion for the first time since December 2020. In his interview, Mark Yusko discusses the FTX collapse, weathering the crypto storm and recession. We will now take you through the interview. But before we do, please take a little time to hit the like button and don't forget to drop your comments below. We are trying to hit 200,000 subscribers by year end. So please subscribe if you are yet to do so and turn on post notifications for more videos like this. Thanks and enjoy.
We go from 70,000, we start plunging, and we get to this spring around early June. I was down in Austin, Texas at a consensus event. And I tweeted out, look, no one wants to hear this. But the longer we stay at 30,000, and we had fallen from 70,000 down to 30, and we were doing this thing it's called a descending triangle pattern, where you keep hitting the floor and you bounce, but each bounce is lower and lower. So you make this triangle, literally. And I said, look, these triangles always resolve. Either you break out and go back up, or you break down and you fall in most cases around 50%. So I said, no one wants to hear it. We're going to 15,000, but that could happen. 6 days later, we had the June 15th. So I guess that was June 9th, June 15th plunge where we hit, 17.5 wick. We didn't settle that low, but that was close enough to 15. I'm like, okay, that's the end of crypto winter. What I missed was fraud, right? Sam Bankman-Fried and all his compatriots in Carolina, they committed massive fraud. I mean, unparalleled fraud in our industry. And it's going to come out how bad it was and how they were cooking the books and how there was no books to cook because they didn't have any money. And it was all just a Ponzi built on this FTT token. Make a long story short, that's the nor'easter. So while I believe we're in crypto spring, and that spring is where it's just volatile, kind of up and down until crypto summer comes again in advance of the next halving in early 2024. So kind of middle of next year, we should start to enter summer again and get back to positive. This nor'easter just dumped a bunch of snow and there was too much leverage again. And I didn't see it, right? And now look, we never invested in FTX. We never did anything with Alameda. In hindsight, had I ever met Caroline, I would have run away like super fast. I mean, the fact that person was in charge of a multi-billion-dollar enterprise boggles the mind if you've seen any of the videos or posts of her. So I believe that this squall, right, this storm, I think is the last cathartic unwinding of the excess leverage, right? Three Arrows Capital was bad, and there are a bunch of individuals who are over-levered. I could be wrong, but I think this is it. I don't think there's any other deep pockets of leverage, particularly fraudulent leverage, that are out there. So the fact that we've been pretty resilient here and we've bounced off the bottom, I think we're back to spring. The storm is past. There'll be a little bit more fallout as other people realize, and maybe in some of the illiquid tokens that FTX was part of, like Oxy and Liquid and things like that. Those are probably all zeros. But Bitcoin in particular, I think looks really good going forward. And people will start to realize that probably today we're below fair value. Fair value is probably somewhere in the high teens to low 20s, depending on which Metcalfe's law model you look at.
As the industry struggles to contain the FTX situation, there are two great positive events to look forward to within the next 2 years. The first is an easing of the current monetary tightening environment. Several market participants, including Mark Yusko, believe we may begin to see changes in the overall macro environment as soon as early 2023. The other event is the Bitcoin halving event, which will occur in 2024. Both events will provide a better environment for Bitcoin and crypto assets to rise. Let's get back to Yusko's interview as he discusses recession and its impact on Bitcoin and other crypto assets.
So we're probably in a recession. It's a shallow recession similar to 2001. People forget, 2001, we had the tech crash, and 2001 was when the body started to surface of the bad stuff. 2000 really wasn't that bad a year. It was the market peak. Market was only down 8% that year. 2001 is when the things like Enron and WorldCom started to come to light, and Amazon plunged 90+%. And the first quarter GDP was negative, second quarter was positive, third quarter was negative. Then we had 9/11 that exacerbated the problems. And the whole year we still grew 1%, but that was a recession, but it was shallow. And then 2002 was really the bad year. That was the down 20-something% year, because that was Enron, WorldCom, and all these bad companies that were doing bad things were basically flushed out. And so I can make the same argument today. And we had 2 negative quarters, and this year is going to be, very low GDP growth, likely a recession. Now, whether they deem it a recession or not, that's up to the NBER. And they keep clinging to this fact that employment's still high. I'm like, well, it's just because you count wrong. You take out all the people that are over 65 and say they're not working. If you've been to Walmart, you've seen that they're still working. And you make up this thing called the birth-death ratio that just literally makes up jobs out of thin air based on some old formula that they've been using for 30+ years. Stupid. In today's technology, we know exactly how many people are working. We know who pays taxes, payroll taxes. We don't need the birth-death ratio anymore. So recession, different question. Interest rates, look, they raised interest rates to the point of breaking a bunch of stuff. We have the worst bond market performance in the history of the bond market, saying something, 140+ years, worst bond market. The worst performance of the 60-40 stocks and bonds, second only to 1931, which was the last time we turned a garden variety recession into a depression by over tightening and passing tariff laws. So sounds familiar. That's the second piece of it. Then the third piece of it is crypto. Well, here's the thing. Crypto isn't correlated to any of that other stuff. It's 0.0 correlated to bonds and 0.15 correlated to stocks. Now people say, oh, no, from November to June, it was highly correlated. I'm like, yes. In liquidations, when everybody's being forced to sell assets, irregardless of price, to pay margin calls, right? Your Peloton stock that you bought on margin goes down 95%. You can't sell Peloton to pay it back. You have to sell crypto or gold or bonds. And so in liquidation markets, correlations go to 1, fine. But the long-term correlation of Bitcoin to the stock market is 0.15. Why? Because Bitcoin isn't dependent on the things that stocks and bonds are dependent on: economic growth, interest rates, corporate profits, right? Bitcoin price is dependent on millennial adoption, right? Millennials have a larger percentage of their assets in digital assets versus traditional assets. It's dependent on the technology itself, the innovation of the technology. It's dependent on regulation, and there's regulation coming down the pipe. So the return drivers have nothing to do with traditional economic drivers of stocks and bonds. That's why it's uncorrelated. And people say, oh, but it's dependent on the Fed printing money. No. One Bitcoin equals one Bitcoin, right? Always will, always is. One Bitcoin equals one Bitcoin. But we don't price Bitcoin in Bitcoin. We don't price things in Bitcoin. We price things in the US dollars, in Israel in shekels, in China in renminbi, in Venezuela in bolivars. So if you look at the price of Bitcoin in those currencies, in dollars, it's volatile. But that's because the dollar is volatile, right? Sitting here in Chapel Hill, I'm sure yours is the same. According to Zillow, my house went up 40% in value in the last 12 months. That's bullshit. That's ridiculous. My house did not grow. My house did not get more efficient. In fact, it wore out. I had to put money into it to make sure it didn't devalue. So it didn't go up. What happened is the currency went down. The Fed printed 50% of all the money that's ever been printed in the history of the Republic from 2020 to 2022. Think about that. 50% of all the money in 246 years printed in 2 years. So the price of Bitcoin should have doubled, right? If you print twice as much money, price of Bitcoin should double, denominated in dollars. It's exactly what it did. It went from 10,000 to 20,000. Interesting. So people say, no, but it went to 70,000. I'm like, no. I mean, it did, but that was for a short period of time, and that was just excess speculation and leverage. Once you take that leverage out of the system, the value of the Bitcoin is double, from 2.5 years ago. Look in Venezuela, there's never been a bear market in Bitcoin because it's priced in bolivars, which have gone down 99.9999%. So it's always number go up. So we have to separate how we price assets.
Do you think the crypto winter has ended and we may begin to see price increases as soon as the FTX situation blows over? This is the situation with the US stock market, which has continued to see decent price gains since the beginning of the whole fiasco. As of press time, the S&P 500 is trading above $4,000, a 5.43% increase over the past month. Let us know your thoughts and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications if you are yet to do so. Thanks for watching.